Welcome to the weekly Prosperous Overview. My name is Jeremy and let's dive into the markets and see what this week got in store for us. First and foremost, let's look at the Dixie. That's where we always start. Pulling the fib from the bottom of the swing on the weekly time frame. So from the bottom of 89.5, that's where the swing starts, all the way to 114.727. What we didn't see quite clearly directly is that market has tapped into the sweet spot zone, which is the 50% to the 61.8 Fibonacci retracement. Inside there, you will see the pink striped lines, which are the weekly key levels to be respected. As you see, market has respected them again and again, again and again. Only time it really broke through it without respect was here. What does that tell us? We have the daily key level right above. That's the pink blue striped line that you see. And if we zoom in a little bit to the daily time frame, then you see that market is right now currently testing this level as support, the daily key level as support. If we pull fib on the most recent swing that we see here, then we will see that right underneath it, we get the 23.6, and that one correlates perfectly with the Fibonacci 61.8. So that's the little box that I have marked out here, the little orange box. And why is that one marked up? Because that's the perfect retrace level. So my projection is this. Market, the US dollar right now is looking to break this low, which is basically already has done on the lower time frames. If we go in the hourly time frame, then we see that it has created a lower low. And the bounce back, the pullback was not very strong. So it's looking to break this level again. Has tested it as support, rejected it, but every rejection, as you see it, is getting more and more shallow. It's creating lower highs all the time. So it's showing weakness. We got news on Wednesday, but up until Wednesday, I think we will break this key level. We will come down and test this strong support level down here at 102.86 up to 102.96. If so, what does that mean for the other currencies and Forex pairs that we're looking at? First and foremost, gold, of course. So looking at gold from a macro perspective, what do we see? First and foremost, of course, we have the major key level here up here at 2080. All right. That's the one that we have tapped into 3 times before. First time 2020 in July, then second time we had it in 2022 March, third time we had it in 2023 April, and then last time in 4th of December we broke straight through it and dipped right back down. So if we zoom in, then we see that it just left a major wick there. We came back up, tested it 3 weeks ago, so the 28th of December, retraced, and market is definitely looking like it wants to get back up there and do some damage again. And if it comes back up there, I firmly believe that we are going to break it and you're going to see some kind of rocket flight up, because gold is fundamentally super undervalued. You can always correlate gold price to the American debt level, and the debt level has increased a lot while the gold price hasn't. Before, they were always correlated. So what does that tell us? That tells us that the debt level, the debt ceiling has increased a lot while the gold price hasn't caught up on that. So gold should catch fire and stop flying. And I think that will definitely happen once we break that 2080 level. So when do we break that level? Let's look at this a little bit. If we pull Fibonacci from almost the lowest point where we were at last year, then you will see that what we're testing and what we're resting against is the 38.2, which is the most popular retracement level when it comes to gold. We love the gold. I call it the golden zone, the sweet spot, because gold loves to retrace there. We have seen it here. The first retrace came to the golden zone. Now the second retrace is hitting the 38.2. And then if we pull Fibonacci from this swing that hit the golden zone to its top, perfectly confluent, you will see that you got gold stuck inside the golden zone of this swing. So from this bottom to this top, we got gold stuck there in between, doing some form of ranging. So it has double support from the 61.8 from this swing, and it has support from the 38.2 from this swing. With that said, we have to recognize also that on the lower time frames, gold has created a lower low. So we have high, and we have low, high, and now a lower low. This is on the 4-hourly time frame. So we are downtrending on the 4-hourly time frame. That is important to recognize, because on the daily, we are bullish. You see this bullish trend here. So my take on gold is this. We are coming down here to the 78.6 to the 88.6 Fibonacci levels. That is the demand zone. Picking up supply to go further up. And down here, what you see if you look on the left side is that we have a massive fair value gap. It's on the 4-hourly time frame. Also, down here, what do we have? A very strong order block. This order block is very strong. Why is it very strong? Because this is the order block that created this whole push, this massive 4-hourly candle that you see here that just broke straight through this high here. So this is a strong order block. There's a lot of unfilled orders. Market needs to come down and fill it. So therefore, I believe that we will see market retrace down to the 78.6 and then further down to this order block here to pick up supply, pick up liquidity. Then we have mitigated this whole fair value gap is mitigated. Then we have shown respect to the we have shown respect to the 88.6, and from there I think we have a very nice flight upwards to new higher destinations. We might come down all the way to 1971 just to take a quick grab from the liquidity zone here on this major swing. So the bigger sweet spot zone that I mentioned before that when we looked on the daily time frame. And that is this one. So I'm gonna make it these lines fatter so you can distinguish them. Back to the 4-hourly. And that is what I can see. But my projection is that 1980 around 1980-ish all the way up to 1990-ish is the level we're coming down to before we go on this massive flight. So for now, I see a bearish gold. Now that of course doesn't correlate with our take on US dollar being bearish, all right? So if dollar goes bearish, normally what do we see? We see gold going bullish. But here's the thing. Lately, gold has started to decoupling itself from the US dollar as moving in reverse. So gold used to always move in reverse for the US dollar. Dollar pumped, gold dropped. Gold pumped, US dollar dropped. And that was how it was. It was most often because of when you bought gold, you most often bought it with US dollars. So when central banks started to accumulate gold, they needed US dollars to accumulate that, and then they sold off US dollars against gold, and therefore dollar went down, gold went up, and in reverse. Nowadays, you can buy gold with yen and a lot of different currencies, which makes the dollar not as important for gold anymore. So you can see gold going on a major pump while the dollar side by side with it is pumping also. So therefore, I think that we can see the dollar drop down to the support level while we can see gold also drop down. But who knows? Maybe gold goes on a little mini pump to grab some liquidity, maybe fill this wick here that you see here, and then from there dump down to the support level. Here, if we're coming down here, I'm definitely placing my longs. This is where my longs coming in. Exactly where the stop losses will be, where the take profits will be. That remains to see. That is something that I will talk about on the live sessions that we have in Prosperous Academy. But definitely counting on a major target. So I'm counting on at least 500, 600, 700 pips. This is a swing trade, most definitely, if we're coming down here. If we take a look at Euro USD, then it's actually the quite opposite to the dollar, because the Euro USD tends to go in reverse of the dollar, of course. It's paired against the US dollar. And as you can see here, on the bigger time frame, on the monthly time frame that we are on now, we are on an uptrend, all right? So we have this major swing. We're talking about this swing that happened from 2000 all the way up to 2008. If we're looking at this, then we see the market came all the way down to the demand zone down here, with price levels at around 0.956, and then it bounced up. But that bounce up has definitely stalled off, as you can see, and the 61.8 Fibonacci is working as a major resistance in this case here. Therefore, we're putting this line here, weekly key level, because on a weekly time frame it's the same thing. So this is a major resistance the market needs to break. But right now, it doesn't show signs of wanting to break it. So if we go and zoom in a little bit on a daily time frame, then what do we see? We have this swing from this top to this bottom. We see the market dipped in perfectly to the sweet spot zone. And we see also the 61.8 from this top to this bottom correlates perfectly with the weekly key level that I've marked out. I'm even going to adjust it a little bit so that we have it perfectly on the 61.8. All right, now what you see, we broke below it, came above it, was trying to create some form of new uptrend, but right now what we're doing is we're testing this one from underneath. We're testing the 50%, which is at price level 1.09. So the 1.09 is the key resistance level right now that we are trying to break through, and that we're having a hard time breaking through, and that didn't work very well as support. As you see here, market bounced off but dipped straight through it. Look, zooming out a little bit, you see this also. You have this low that created this high, and this low has been taken. We have a change in character, so we're downtrending now. So from this top to this bottom, we are inside the sweet spot. If we break below the 50%, so if we break below 1.0865, I think we have a long way down to go. I'm talking about the extensions, at least the 27.2, so that is the levels at 1.022. But I think we can go much further than that. I think we can even break this low that is here. It's of course a ride down there. We're going to zigzag a little bit. You're going to see regular market structure being created. But my take is that if we're rejecting the 20-day EMA here, we're rejecting the 50% Fibonacci, we're going to see a long way down. So therefore, I am bearish on the euro right now. I am bearish on the euro because I'm bullish also in the same time on the US dollar. I said this little pullback, yes, of course, but this pullback is minor in the bigger picture. If we're going up from there, same thing for euro. We can have a little pump up, testing the 61.8 again, picking up liquidity from this order block up here. Right here, we have a small order block. We might pick up some liquidity and then dump further down. So for Tuesday, what we're looking at is to see what the Asian session has done with euro. Has it pumped up euro to the zone? I'm definitely selling. Has it pushed euro below these lows? I'm definitely selling as well, but I might be waiting for a little pullback before I'm selling, because that sell will be ultimate from around this area. So if market is below and has mitigated this fair value gap over here, then I'm looking at market to get back up, and that's where I'm selling from. Looking at targets further down. As I said, we're going to see how the market react, but I think we can start looking at targets much further down. If market comes up here and start playing with this area, and we are still there, London session tomorrow morning, then we're definitely looking at sells from there as well. All right. Now a quick look at BTCusd. What has it done? We have a very strong order block over here, both on a weekly and a daily time frame. As you can see, the blue box, the blue rectangle box with a blue rectangle box inside of it. That is the daily. That one is fully mitigated. All right. So we have fully mitigated. We touched it once, twice, third time, fourth time, we fully mitigated it. And now what do we have? We have this big push downwards on the daily time frame. We came up, retested on the 4 hourly. We came and retested this weekly key level here. This is the weekly key level that you see right here. We came and retested it, and now we're dropping further down. This low is already bound to be taken. So we can see this low be taken up until tomorrow. I think it's gone. And we will see levels at around 39,700. But I think the market is dropping much further than that. So we have that low confluent perfectly with the 127.2 Fibonacci extension level. So that's the 39,700 as I spoke on. But I think we're dropping down to 37,500 at least, is what I think we will see. Why is that? Well, first and foremost, because we got strong support and resistance over here. So if I go on a weekly time frame, you will quickly see something important. What do we have here? Resistance, resistance, support all the way. Here we had some form of resistance before we broke through. Market, if it comes down here and you see that the 20-day EMA on the weekly time frame is confluent with those levels also, I think we will see market coming down and testing this level again. And if we go out from the line charts, what we then quickly can see, if we pull fib on this whole swing from that bottom to that top, is that just there, what do we got? We got the 50%. We got the sweet spot zone that we know that BTC loves to respect. Further left, what do we got? We got fair value gap, a strong one also. Boom. Perfectly confluent with the 50% to the 61.8 Fibonacci retracement, which is, as I mentioned before, the sweet spot zone. So I see the market definitely coming down to these levels. And this is a very, very potential buy level. Definitely. If it's a buy for a new major pump that will take this high, we don't know yet. We will see. But at least a couple of hundred pips we got to catch here. So we're looking at entry levels on around 37,000 all the way up to about 37,500. That's the entries we're looking for. Market dips down there. It's a very juicy buy for us. But you don't want to buy directly as market touches these levels, because if you've been on these streams and if you know anything about BTC, then you know this. BTC, Bitcoin, loves to do this and take all the stop losses out. And we don't want to be a part of those stop losses. We don't want to be the liquidity. We want to grab the liquidity with the market makers. So we let it do its stop hunt. And if market comes down all the way down here, we take in that offer, buying it on discount, and then we're writing it up. Stay tuned on the Prosperous Academy on our live sessions to know when to enter the market in the correct way. We will call it out there, either on the live sessions or in our Trade Ideas channel. With that said, thank you for watching. Stay tuned and stay prosperous. Peace out.